my YouTube channel. Today we are going to be dealing with accounting. Specifically, we are going to be looking at grade 12 accounting. And this is the textbook that we are going to be using in today's lesson. Study and Master Accounting Grade 12. Which topic then? The first topic that we are going to be dealing with is the first topic that we actually find in the syllabus for grade 12, which is companies. But remember what I said. I'll only be looking at the critical areas, the challenging areas, the key areas that I believe you need to have a full understanding so that you can actually be able to pass your test and your examinations. The first thing that I'm going to talk about is shares. What are shares? Okay. If you remember from your grade 10 and grade 11, the people who own companies, we call them shareholders. Why are they shareholders? It is because they own shares in companies. They own a portion of a company. So whenever they give their investment to a company, their money, they contribute their money into a company, we call that money shares. That is the money that actually makes up the capital, which we end up calling the share capital of a company. So that's what we are going to be dealing with. For those of you who have got this textbook that I'm using today, the Study and Master, I want us all to open on page 8. For those who do not have, just listen to what we'll be discussing and we'll take it from there. So I'm opening now on page 8 of the Study and Master textbook. Okay, it's actually shares. You will find a topic there, a subtopic that is written shares. Okay, why shares? Any form of ownership, it needs money to start and even to run. So where does a company get its money from? The money that they use to start. The money comes from the shareholders. And I said that money, it is called shares. Okay. They get these funds in the following ways. Raising funds from shareholders. So in other words, a company has to sell shares to these shareholders. Whenever these investors buy those shares, then there will be share capital available for the company to be able to start and to run. And they can also use generated profits. They can also use money from external sources, that is loans from financial institutions, banks, and so forth. All right, but remember, in grade 12, there are many kinds of shares, but the only types of shares that we're going to be looking at right now, I'll only give you a brief explanation on the two types, but we are actually going to be looking at only one type of share throughout the whole syllabus. We have got what we call preference shares, and we also have got what we call ordinary shares. Okay, what is the difference between the two? The preference shareholders have preference over the ordinary shares. Yes. In the event where the company is liquidated, in other words, when a company is being liquidated, the company is broke, is bankrupt, and funds now are being distributed, the preference shareholders are the first ones to receive money before the ordinary shareholders. Okay, that is an advantage that they have. Ordinary shares are therefore riskier from an investor's point of view, but they usually outperform preference shareholders on the stock markets. Okay. So most shareholders that we'll be looking at, most shareholders that we'll be talking about are those ones who are actually owners of the what? The ordinary shares. Ordinary shareholders are not guaranteed to receive dividends because ordinary dividends depend on the profitability of the company. What does this mean? It simply means that whenever there are profits, then they can be able to get a dividend. But when there are no profits, they might get nothing. Unlike the preference shareholders, who receive a fixed dividend each and every year. So that is a disadvantage that they also suffer. Preference shareholders generally receive a fixed dividend, like what I said. But however, let's not worry that much on the distinction between the preference shareholders and the ordinary shareholders. What we are very much interested in are the ordinary shares. How are they issued? How is the money received? How do they know the amount that they should raise or the number of shares that they should issue? Okay, that's where I'm going to now. There's what we call authorized issued share capital. So when a company is being registered, in their memorandum of incorporation, there is an amount which will be indicated, which is the maximum amount or the maximum number of shares a company is supposed to issue. We call that an authorized share capital. Okay, so from the authorized share capital, you find out that it's not likely that the company will issue out all its shares once. They'll issue some of their shares and then they'll remain with some. So that portion of shares that have been issued, we call it issued share capital. Or those are the issued shares, are the number of shares that the company has actually sold. They will not sell everything. Remember, what they have is an authorized share capital, but they will not issue out all the shares that they have. They will only issue out some of their shares. And that portion, we call it issued shares or issued share capital. And then those ones that remain, of course, we call them unissued share capital. Thank you. Okay, now we are actually going to be looking at an activity that will actually explain to us or show us exactly how these shares are received and how they are actually recorded in the books of accounting. So we are going to be looking at an activity that is on page 10 of our study in Master Grade 12. The activity is activity 1.3. We are going to record these shares. The first requirement, they want us to record in the general journal. They want also us to open an ordinary share capital account in the general ledger, and then to show the effect of on the accounting equation. And then the last part, which shows how it is recorded in the notes to the financial statement, we'll look at it another day. For now, we are only going to look at part 1 up to part 3, the general journal, the general ledger, and the accounting equation. Exactly how do we record shares that have been issued, money that has been received from the shareholders. Okay, all right. So as from now, I'm going to be reading for you the question for those ones who do not have the textbook. Okay, the question goes like this: Activity 1.3. Franken Limited are registered to issue 140,000 ordinary shares. The following entry appeared in their books on the 1st of March 2018, the beginning of their financial year. So this company has already been in existence, and they are starting already with an ordinary share capital of 200,000 shares, 200,000 rand, which is made up of 50,000 shares. On the 1st of May, the company offered a further 70,000 ordinary shares to the public at 4.30 Rand each. By the 31st of May 2018, the company had received applications and full payment for all these shares. Did you hear that? They issued out a further 70,000 ordinary shares. At what price? 4.30 Rand each. So we can already start to multiply 70,000 times 4.30 Rand, so that we can find out exactly how much was the additional ordinary share capital that they raised then on the 31st of March. Okay, so the requirements I've already given them onto you. So this is what we are simply going to be looking at: how to record the additional shares that have been issued, how we record this transaction also in the general ledger, and how we also show it on the accounting equation. Activity 1.3, Franken Limited. Remember, they told us that how many further shares were issued? They said there were 70,000 shares. At what price? They were issued at 4.30 Rand. So the first thing that you need to do is to take the 70,000 shares, you multiply them by 4.30 Rand. It is actually going to give you 301,000. So this is the amount that they raised, the additional share capital that they raised. Remember, they said that at the beginning they were already having how many? 200,000, how much? 200,000 rand, which is made up of 50,000 ordinary shares. Okay, fine. The first requirement, they want us to do the general journal. Of course, all right. The general journal, of course, we know that whenever a transaction takes place, two accounts are always affected. That is double entry. I'm taking you back to grade 10 right now. Okay, this money has been received, and this money is for ordinary share capital. So already we know that one account is ordinary share capital. Which one is the other one? Which other account is going to be affected because of this transaction? Money has been received. Whenever money is received, it means that also our bank account is going to be affected. Are we still together? So the two accounts that are affected because of this transaction, it is bank and ordinary share capital. I know your question now, as you look at my board right now, will be like, how do I know then that I'm supposed to debit bank and credit ordinary share capital? How do I know that? Yes, let me answer this to you. All accounting transactions, entries, ledgers, and whatever, they all belong to the accounting equation. What am I saying? In other words, I'm saying that all accounts can either be assets, they can either be shareholders' equity, ordinary shareholders' equity, or they can also be liabilities, owner's equity or liabilities. Okay, it's fine. So the first thing after identifying the two accounts that are affected is to ask yourself, where do my accounts actually belong to? Are they asset accounts? Are they owner's equity accounts? Or they are liability accounts? The moment you know that, then you'll be able to know what to do. Let me also give you this other hint. All asset accounts, they increase on the debit side, they decrease on the credit side. All owner's equity accounts, they increase on the credit side and they decrease on the debit side. And all liability accounts, they increase on the credit side and they decrease on the debit side. So the moment you know that, you'll never record anything on the wrong side. So when you look at bank, bank is an asset. And I said that all assets, they increase on the debit and they decrease on the credit side. What is happening to our bank account? Our bank account is increasing. Maybe I can start now by looking at the accounting equation. Our bank account, we said, is an asset and the asset is increasing. Okay, so whenever an asset is increasing, it means we are supposed to record it on the debit side. Okay, ordinary share capital, where does it belong on our accounting equation? Ordinary share capital is part of the owner's equity. What effect does it have on the owner's equity? It's increasing our owner's equity at the same time. And what did I say? I said all items that increase owner's equity, they are supposed to be recorded on the credit side. That is the reason why you find out that we have written ordinary share capital on the credit side. Issued 70,000 shares at 430 each. So we are done with our general journal. So it's more or less like similar what you do in the general journal and what you do in the ordinary share capital. You are using the same principle of double entry. Remember, ordinary share capital is an owner's equity account and it increases on the credit side. And we are saying that there was a further or an additional amount of capital that was introduced on the 31st of May. So at the beginning, in our ordinary share capital account, we are already having 200,000, which is our opening balance. The additional amount, remember I said whatever increases goes to the credit side as well. So 301,000 is increasing our ordinary share capital account. Now at the end, we're having 501,000 as our new ordinary share capital for the year 2018. So I've already explained the accounting equation and I've explained the general journal. The moment you do the general journal properly, it means also your ordinary share capital is going to be done properly. Okay, so far when we are looking at activity 1.3, this is how you are supposed to show your recordings. The only recording that is not here is the one whereby I will show you how we record all this information in the notes to the balance sheet or the notes to the financial statements. I thank you very much for tuning in to my channel today, and I hope that you have actually managed to understand even some things that you thought they were difficult. I believe that most of the things that I've explained here, I've fully explained them to your own understanding. If there are any questions, please do not forget to go to the comment section and write a comment. Do not forget to like my channel. Do not forget to always tune into my channel. Thank you so much.